Volume in a lot of these big ETFs today. Joining us to discuss, Dave Nadig from ETF Trends, Nicholas Colas from DataTrek. Dave, the heavy volume is coming from several directions today. Tech-oriented ETFs, the robotics ETF, semis, lithium and batteries, momentum ETF itself, all off of the lows, but down on heavy volume. Also cyclical names associated with the reopening down on heavy volume, the oil, metals, airlines, banks. Dave, is the reopening fizzling here?
Yeah, I mean, I think this is what's happening. As the reopening is fizzling, we're starting to bring some reality back to some of these names that may have run too long. You look at what's working at things like materials. I think we got a long way to go before we can really get a rally until we can find a bottom in some of these names that ran so hard.
Yeah. You know, Nick, despite today's action, other parts of the market are holding up a lot better than tech and banks, like materials and some of the industrials for the month. But both tech and banks are down big in September. I'm wondering, how long can you really keep a rally or get off of the lows here when tech and banks are not contributing at all? They're not bouncing.
Yeah, that's right. I mean, tech and banks are 37% of the S&P 500, and the big five tech names are 22% on their own. So that and correlations rising during periods of volatility, it's very hard to hold the market up if you just, even if you've got a couple of small groups working.
Yeah. Okay.